Welcome to our channel, where we share investment insights and advice. In this video, we will discuss penny stocks and penny stock investing. Penny stocks are stocks that trade for less than $5 per share and are typically regarded as a high-risk investment. However, if they are invested in wisely, they can also offer the potential for high returns. In this video, we will discuss penny stocks, some examples, the risks associated with investing in penny stocks, and how to invest in penny stocks. How do penny stocks work? Typically, penny stocks are issued by small companies that are not listed on major stock exchanges. These companies typically have a market capitalization of less than $300 million, and are deemed high-risk investments due to their limited liquidity, absence of financial history, and susceptibility to market fluctuations. However, penny stocks also have the potential for high returns, which makes them an attractive investment choice for some investors. There are numerous examples of penny stocks becoming profitable. In the early 2000s, Monster Beverage Corporation, MNST, was a penny stock trading at approximately 50 cents per share. Today, its market capitalization exceeds $50 billion, and it is a well-known company. In 2008, Shopify was a penny stock that traded for approximately $1 per share. Today, its market capitalization exceeds $100 billion, making it a successful e-commerce platform. The lithium and rare earth mining industry is an industry with potentially profitable penny stocks. As the demand for lithium and rare earth metals increases due to their use in electric vehicles, renewable energy, and technology, businesses that are well positioned to meet this demand may have growth potential. But how do we look for potentially successful mining juniors in rare earth? Junior mining companies with strategic partnerships or collaborations with larger, established companies in the industry may have a greater chance of success. A company with an experienced, industry-proven management team may have a greater chance of success. Also, a company with a robust balance sheet and a low debt-to-equity ratio may be better positioned to withstand market volatility and capitalize on growth opportunities. Consider companies that have recently made significant announcements, such as new contracts or partnerships, or have secured funding for expansion when researching penny stocks in the lithium and rare earth mining industries. In addition, seek out companies that have a distinct growth strategy and are forthcoming about their plans and finances. Despite the potential for high returns, penny stocks are accompanied by significant risks. It can be difficult to find buyers for these securities due to their limited liquidity, which can result in significant losses if the stock price falls. In addition, many penny stock companies lack a substantial financial track record, making it difficult to determine the true value. Scammers frequently target penny stocks, using misleading information to manipulate stock prices. They frequently employ pump and dump schemes to profit from retail investors. If you are interested in investing in penny stocks, you must conduct thorough research and make sensible investments. Learn the financial history and business model of the company you are interested in by conducting research. Look for firms with strong financials and a proven track record. Additionally, consider portfolio diversification to reduce risk. Finally, be prepared to monitor your investments closely and make necessary adjustments. It is essential to rely on reputable sources of information when researching penny stocks in order to make informed decisions. Here are some useful resources for research. Financial news websites such as Bloomberg, CNBC, and Yahoo Finance are excellent resources for current penny stock news and analysis. Stock screeners such as FinViz and Yahoo Finance can help you filter penny stocks based on a variety of criteria, including price, market capitalization, and industry. The Securities and Exchange Commission, SEC, mandates that publicly traded companies file periodic reports, such as annual reports, quarterly reports, and current reports, which are accessible through the SEC's EDGAR database. These filings can provide valuable information regarding the finances, management, and operations of a company. Although not always reliable, stock forums and social media platforms such as Reddit and Twitter can provide information and discussions about penny stocks. If you are unfamiliar with investing or unsure of how to conduct research on penny stocks, you may want to consult with a professional investment advisor who can provide personalized guidance and counsel. Remember, when researching penny stocks, it is essential to consider financial information, management, and growth potential. Before investing in any penny stock, it is vital to perform your due diligence and conduct extensive research. Be wary of schemes and misleading information, and always invest with a long-term perspective and within your risk tolerance. You can potentially capitalize on the growth potential of these small companies while minimizing risk if you adopt a prudent and well-informed strategy. Thank you for viewing, and best of luck investing.